All right, cheers YouTube. It's another Friday night, and I wanted to do a follow-up video from last week's video about 5 things you can do to get started in investment real estate. This brings me to what this channel is about. Okay, I wanted to take you guys along a journey with me on purchasing investment properties, which I will be doing one or two this year, and I wanted to take you through a couple tours of properties and the process I used to purchase that. I know when I first started, I didn't have any resources, and I thought this would be great for you guys to kind of go through that process. If you like content like that, please go ahead and like, comment, and subscribe to the channel. I would greatly appreciate it. I have over 15 years as a commercial lender, business banker, and a real estate investor, and I do think I have some ideas that might be helpful to you. Okay, so this video is going to be primarily about the 5 C's of credit and what you need to be able to be approved for a mortgage, whether that's to buy your own house or buy an investment property. Okay, the very first thing that we're going to get into is the character. Banks are going to be looking at your character, which is translated as your credit. What's your credit score? Okay. In order to know what that is, I would advise you guys to get a copy of your credit report. Go online to Equifax, Experian, or TransUnion and get a copy of your credit report. I know this is a scary thing for some people, but if you're going to be getting into business in real estate, you ought to know what your credit score is. Okay, you don't want to walk into the bank and apply for a loan only to have them tell you what's going on with your credit. Okay, go out there, get online, Google it. I will have the links below for TransUnion, Equifax, and Experian. Go to their website. They will try to get you to sign up for their credit watch. That is not necessary. You can go ahead and get a free copy of your credit report from each one of these sites once a year. Okay, that's by law, they're required to do that for you guys. So go ahead and get a copy of it, see what's out there. If you've got items that need to be disputed, go ahead and do that. Go ahead and get those things corrected before you apply. There's nothing a banker hates than being surprised. You walk in there and you apply for the loan and you didn't tell them about the judgment with Time Warner Cable. Okay, go out there and find out what's on your credit and get that thing fixed. Okay, the second component that financial institutions are going to be looking at is your capacity. Okay, you would be surprised. A lot of people are not looking at what their income is, what their debt to income. That's what the bank is going to want to know. Can you repay the loan? Okay, go ahead and do the calculation. What they're going to be looking at is what are your total debts on your credit report. They're only looking at your car loan, your mortgage, anything that reports to your credit. This is why your credit report is so important. Okay, so let's say you make $100,000 a year. The debt to income ratio that most financial institutions are looking at is they would like to be 36 to 40% debt to income ratio. That's including the new loan. Okay, so what you need to do is you need to add all that up together, add in the new proposed loan, and try to figure out what your debt to income ratio is before you go and apply. I'm going to tell you, I've watched a lot of videos, and a lot of people don't even say that. They're telling you go in and apply. I'm telling you, you need to know what your credit is. You need to know what your debt to income ratio is before you go and apply to these things. It's almost like you're pre-qualifying yourself before you go to the lender. This is going to make your process smoother. This is one of the things that I'm trying to do on this channel, is to give you guys a real layman's description of what you need to do so that you're not wasting a lot of your time and that you get the best result that you can. Okay, so you definitely need to figure out what your debt to income ratio is, and if you can fix this. Okay, so let's say your debt to income ratio is already at 40%. Well, there's a couple things you can do. You can sell that car, you can pay off that car note, you can increase your income. You need to figure out how you're going to affect your debt to income, whether that's increasing your income or decreasing your debts. You got to figure that out before you go apply. Okay, save yourself that trouble. So that's number 2. The number 3 thing that the banks are going to look at is your collateral. What are we lending you the money for? What are they going to lend you the money for? Is it a mobile home? Is it a manufactured housing? Is it a stick-built home? Is it a rental property? What's the appraisal? What was the last sale? They're going to look at all these factors. Is the property in a depressed state? They're going to be looking at all these things. So the collateral is really important. Okay. The collateral for me is going to also take into account what's your loan to value. You know, if you walk into the bank and you say, hey, I got 20% down, you're going to find a lot of institutions that will lend you the money if you've got issues with the other C's of credit. Okay. Most institutions want all the C's of credit to be perfect, but certainly if you have a good down payment, they're going to be happy with that. I'm not talking about equity where you're saying you're purchasing the house at $80,000 and it's worth $100,000. No, what I'm saying is that they're going to want you to put money into the deal, and that you're going to have equity going into it. So the collateral is going to be very important to the financial institution. What kind of cash flow you're going to make on the collateral? Is it enough to pay for the note? So those are important factors, okay? If you guys so far have any questions about what I'm talking about, please put those in the comments. I'll be more than happy to answer you guys and help you through that. Okay, the fourth component is going to be capital, okay? So what capital essentially means is, do you have the net worth? Do you have the cash on hand that if you lost your job, if the renter didn't pay, if the real estate went down, do you have mitigating factors to offset the liability that the bank has with you? So they want to know how much cash you have on hand. That's another component they're going to look at is what kind of capital do you have? Okay, so that's the 4C. Once again, this you can affect. You can make sure that you have enough savings on hand. You can make sure that if you have time that you can develop that savings, that you go ahead and get that together, because financial institutions want to know that you have the ability to repay the loan in a couple other ways. Okay, the last component that we're going to get into here is the one I dislike the most, and it's conditions. It's the one that you don't have any control over. Okay, when I say conditions, I'm not talking about the weather conditions. I'm talking about economic conditions. Okay, financial institutions are bound by the economic conditions. What is the government lending money to the institutions at? Is it 0% like it is pretty much today, or is it 5%? What are the economic conditions of employment currently in the country? COVID, 2007. These conditions have a lot to do with whether a financial institution wants to lend money to you. Okay, so I'm not saying that you can fix this, but you need to be aware of it. And if the conditions are that rental property are very hard to find lending for, you might want to make sure you have the right property, that your credit's perfect, that you have the other 4 parts of the 5 C's of credit looking pretty good, so that conditions can be mitigated to the bank. Okay, so what I'm an advocate for here, guys, as I've gone through the 5 C's of credit, is don't go into an application, whether this is a car loan, an investment loan, any loan that you're looking to get, please don't go into it with no idea about what your debt to income, no idea about your credit. You should be looking into these factors on your own and pre-qualifying yourself. If you've got any questions about this, I'd like you guys to go ahead and like the video, comment below. I'll be happy to answer those questions. Subscribe to the channel for more content like this. Once again, if we get enough likes and comments, we will be doing more videos about touring properties and walking you guys through the process of buying a investment property. We will be buying both residential and commercial properties as well. So I want to take you guys along the tour, but I need you guys to like, comment, and subscribe. I want to thank you for watching, and I want to wish you guys the best